everyone. How are you today? Thank you for joining us. Well, basically now it's 12 o'clock, so we're 1 hour before the beginning of the New York session, trading New York session. So what I'm going to do today is I'm going to start by I'm going to answer one of the question that has always been asked of me, and it seems that every time I try to explain the answer, there is still some ambiguity towards how to become a successful trader or what is needed to become really a successful trader. And when I say that, I'm not talking about what is the moving average I'm using or what is the technique I'm using. There is a certain basic criteria that everyone that wants to trade and to have a gainful and a positive outcome for his trade has to go through. It's a procedure, and basically he has to answer 5 basic questions. Okay? And I have a little small PowerPoint, and I'm going to show it to you in a second. So basically what you're trying to do in order to become a successful trader is you need to answer, as I said, 5 basic questions. Let me get the first question is, right. So first of all, the market, you have to understand what the market is. Again, these are part of the package for you and I to become successful traders. First, we have to know what the market is. What is the arena we're playing in? The first thing is the market is a zero-sum game. It is basically means that for every trader that is making $1, there is also another trader that is losing $1. Every trade that you and I take, it is like a tennis match. There are 2 players. We're playing each point. Each point that we play together, one of us has to win. And therefore, if one wins, the other loses, and that is the meaning of a zero-sum game. That's the nature of the market. The second thing is the market has the ability to take from the many small traders their little losses, compound them together, and give them to the few traders, and these are the ones that are considered the professionals and the ones that make the most money. Again, these are the basic characteristics of the market. So if the market is divided between what we call the retail customers and the professionals, the retail customers are the ones that are at the top of the funnel. These are the ones that are pouring their wealth into the market, and the professionals are the ones that are at the bottom of the funnel that are acquiring the funds. Both of them together make 100%, and sadly enough, 90% of all those who are participating in the market for one reason or another are not making money. They are ones of the unfortunate few that give money to the majority. And the 10% which are considered the professionals, or again, when you're talking anybody less than trading $100 million is considered retail. Okay, the guys that are sitting on a dealing desks and stuff like that they conduct transactions of 5 and 10 million a pop, these are the ones that are considered the professionals. For us to become successful, we have to, let me move this away from here, we have to also understand the difference between being an investor and being a trader. A trader is somebody that comes into the market, he's playing in a zero-sum game. He's in a match to win the match. He's in the game to win it. He's not in the game to prove a point. He's not in this game to give an opinion. When you're playing the match, you are there to win the point. And how you win the point is not important. What's important is winning that point or taking that dollar. Each point you win is equal to $1. That's what you want to be able to do, is to win that dollar. Putting my opinion that I'm a better trader than you are, or you are a better trader than I am, is irrelevant. If I give you an opinion that the ball should go to the right side of the court or should go that far, that is all opinions. It is not pragmatic or have an impact in the outcome of the game. The game has an outcome. The outcome is the winner. Opinions doesn't get involved in winning games or winning zero-sum games. Therefore, there is this myth, and I don't know why everybody that's in the market who's trying to get involved in the market have this myth that we all have to be an analyst and the analyst is always right. An analyst is not a trader. An analyst is a guy that sits in the stands and he starts watching the game and he gives opinion. You should go there and you should do this and you should do that and you should. And that's what I'm coming to, how to win the game. Exactly. The hand of God, you have to win the game. That's it. And that's exactly the point, bro. When you are in the market, you are in to win the game. You're not looking to be, your opinion doesn't do. But winning the game, if it's the hand of God, whatever, but that's what you want. Okay? So, now, let me go further a little bit here. So now we're going to come to the basic 5 questions that we are going to answer in order to become successful traders. And these guys, these are gospel. These are the rules. You cannot change that. Okay? You cannot change that. That's it. You answer those 5 questions, you become a successful trader. So the first one, when I call it rules, these are the decision-making process where you decide how you're going to buy or you're going to sell. And in order to reach that decision, in order to reach that moment when you decide, I am going now to pull the trigger to take a trade, in order to reach that moment, you have to follow a specific set of rules. I want you to think of yourself if you want to become a successful trader, I want you to think of yourself as being a doctor, a surgeon. Okay? And you are the best surgeon in the world that does appendectomy. Whichever patient that comes in front of you to operate upon, you will always follow the same procedure, following the same specific set of rules in order to operate on your patient. And if you do that, you are guaranteed that your patient is going to survive, and you are guaranteed that your success is very high, because you're always following a same specific procedure. And if you're following a same specific procedure, you will always get better, because every time you repeat these actions, you perfect it, and you become much more better at what you do. And therefore, your patients will survive. And in this case, your patient, when you are in the market, your patient is your net worth. Your patient is your fund. Your patient is your account. And therefore, you have to follow a specific set of rules so that you can guarantee that your account is going to survive and grow. The other question that you have to answer is what to buy. Should I buy the euro? Should I buy the pound? Should I buy the yen? What should I buy? What should I buy? That is a decision that you have to make every morning when you're sitting in front of your computer deciding what to buy. Some people say I like to trade the euro. Some people say I like to trade the cable. Some people, I mean, it's the British pound. Some people say I like to trade the Australian dollar. Yes, these are all patients. Remember, they are patients. You're the surgeon. Whoever gets in front of you that day, the one that needs your attention that day, that's the one you operate upon. You're not going to take the same patient every day and operate an appendectomy on it every single day. You just simply can't. You need to have a fresh patient or a fresh situation every day. So choosing what to trade today is as important as having the rules, because you might get something that's moving today, tomorrow it's going to slow down. So you make money today and you give it back to the market tomorrow. Remember, it's a zero-sum game. You want to win every point. Whether with the hand of God or whatever it is, you want to win every point. So you want to operate or take the trade in the market that's vibrant, that's moving. The second question is how much to buy. Should I buy 1 contract, 5 contracts, 3 contracts, whatever? Again, this is when I'm talking, when we do this, how much to buy. It is part of the stuff that we teach here to our fund managers and long-term traders, because how much to buy and when to buy gives you the ability to diversify. So you can buy the Euro Swiss, the Euro Pound, the Euro CAD, so you have different variations of the Euro, so that means you diversify. If one position goes against you, you're not hurt. You're dividing, you're not putting all your eggs in one basket. Then the third question, and then after this I'm going to go to the chart, or the fourth question is when to buy. You need to buy it at the best possible time. You need to buy it when the move is beginning. When the euro is beginning to move up or beginning to come down, you want to buy it at that right time. Because when you buy it at the right time, what's going to happen is your stock is going to be very small, or relatively small. Your risk about the market going against you will be very small. It will be very inexpensive to find out if you're right or wrong on the trade. Last but not least, what you need is when to get out. Because you want to make sure that you're getting the maximum profit, and you also want to make sure that you're not leaving money on the table. If you are able to answer these 5 questions, and I'm going to show you that on the chart in a minute, how we answer these questions, then you will become a successful trader. It doesn't matter if you're putting the Fibonacci, Mabenacci, Elliott wave, all that blah, blah, blah that doesn't take anywhere, just makes people feel good about hearing themselves talk. Has nothing to do. If you answer these 5 questions in the simplest format, in this, whatever it is, you'll become a successful trader. So, take these rules, write them down, and let's go to the chart now and decide how we're going to answer these. First of all, let me pull up my charts. Okay, so let's put yes, that's part of the trade execution, exactly. Okay, so now let's decide on the first question, what is the rules? That's exactly what I'm trying to do, trying traders. Again, in order to answer your question, you have to, it's not just one question, it is the 5 questions. You put them together, you will always come up with one answer. And that's what I'm going to walk you through now. So you're asking the question about the highs. So the first thing you want to do is let's come up with a strategy, a way to trade. We have 21 basic rules of trading that we use here in Trading Traders, and these rules gives us, again, the response of how we trade. So I will share with you one rule today. We have what we call zones, and these zones is what you see in the 2 yellow lines, the 2 magenta lines, or the 2 blue lines. Okay, these are what we call zones. And again, this is part of our rules, and this rules makes us money, and we're happy with it. And you can follow these rules. Okay, you can follow these rules. So here is the rule. Inside, let me back up. I want you to look at this chart over here, and I'm going to do this. Okay, and now we're on the right hand side of the screen, and I want to ask you, make a trading decision. Right there. Who wants to buy, who wants to sell? And let's do it quickly. Who wants to buy, who wants to sell? Let's say around the 137.40. Who wants to buy? Just by show of quick hand. No chart? Let's do it again. I'll put the camera on. Hold on a sec. I'll put the chart on again. Tony? Okay. That's exactly the point. Okay, do you guys have some guys saying we don't have a chart? Do you all see a chart, please? Do you see a chart? Okay, right. So some people say sell, some people say buy, some people say I don't know based upon my rules. So basically that we have now 3 different opinions. We have 3 opinions, guys. Right? Some wants 3 opinions. Okay. Some of us wants to buy, some of us wants to sell, and some of us want to do nothing. Since this is a zero-sum game, listen now, this is how trading we get. Since exactly, again, you're right. I mean, there is nobody of you that's wrong. Okay? And this is not a quiz. I'm just putting you in the mindset of how to become a trader. Since I have 3 opinions, and the market is a zero-sum game, this means each game, each point in this tennis match, one of us has to win. The guys that are sitting in the benches, who are going to do nothing, they're already losers. The guys that, one of the players, the ones that buy or ones that sell, one of us is going to make money. So this means one of us is going to succeed, and therefore the odds of us making money is 33%. So a third of us is going to be making money, and 66% of the time we will lose money. Because if we decide we're not going to trade, we're still losing money. If we decide to buy and the market goes down, we will lose money. So one of us will only be right. Now, if I put the rules in, I need to change my odds from 33% to make money. I want to change and 66% to lose money. I need to change the odds to turn them upside down. I need to turn the odds upside down. I need to be 66% a winner and that would be my system. And if I lose, I want to lose 33% of the time. This way, I can make a living. This way, I can have, with some money management, I can always make a living and become a successful trader. Okay? So, I need to change these odds. If I have no rules, if I don't have the how, if I don't have the rules, then right here at the right-hand side, things will be ambiguous for me. I will be guessing, or I might decide I'm going to buy. I might decide today, if I feel that I want to sell, I will sell today. So this means I will not be consistent. I will not be able to become a consistent or a gainful trader. So let's change that. How do we change that? We create the rules. So now I'm going to give you one of the rules. Whenever you see two lines on the screen, let me put the lines, and that's why I did that, so that you can see the power of having the rules. And this is where we were with the key lines. Okay? And here is the rules. Inside this two lines, this is what we call the neutral zone. So this is what I'm going to call neutral zone. This means that inside the neutral zone, right there, okay, if I have those two lines, this means if the prices are in between those two lines, it is considered a neutral zone, and it is better for me to sit on the sidelines. It is better for me not to trade. Okay? This is the neutral zone. If the prices go above the neutral zone to the upside, then my decision is to buy. If the prices come below the neutral zone, okay, then my decision is to sell. What I have done is, if the prices come above the neutral zone here, when I tell you the option is to buy, guys, I want you to think with me as traders now. Remember, if I have no rules, I can buy or I can sell, or no, it's not what you call a breakout trading. This is another different kind. You can use any name. You might call it, in a way you can call it breakout, okay? But this is not the intent of it, trying trader. The intent of this is to change your mindset, okay? Forget breakout and those names don't do you any good. But if you change your mindset, and that's what I'm trying to do now, is you'll become successful. And how do I change your mindset? When it goes above here, okay, your choices are, remember, now we have always three choices: buy, sell, or do nothing. If we're above the neutral zone, then your choices up here, trying, is either to buy or to do nothing. Okay? Your choice above here is either to buy or do nothing. Selling is no longer an option. So now, above the key lines, you have two options: buying or doing nothing. Below the key lines, you also have two options: to sell or to do nothing. Okay? So what I have done now, trying, or Charles, is I have taken off one of the three options, and now your odds of success is 50-50, because you only have two choices. I have raised your odds of success as traders from 33% to lose money and 66% not to make money, to 50% to make money. This way, now you have an even chance. You have an even chance to become successful. Therefore, if it's 50-50 and you have good money management skills, if you win, let's say you have a mediocre system that's 50-50. Okay? 50-50. If every time you win, let's say you're going to win 5 times and you're going to lose 5 times. So if 5 times you win, you trade, you make $3. So you'll have at the end of the month $15, or at the end of the day $15. And if you lose $1. So even though you have a mediocre system that is 50-50, you will still so even though it's 50 with money management, your winning will be 15, your losing will be 5, you'll end up by having $10 as a gain. And that's what trading is all about, taking the high probability trades, giving yourself the odds of your success. Of course, there will be false breakouts trying, and that's why I'm saying if you even take 50-50, the false breakouts would be part of your losing, but in this case, you will be quickly able to identify that they are false breakouts, and therefore you're not going to wait and get to lose a great deal. You understand? So once you have a rules, it will be very easy for you to identify it's a false breakout or not, because you have a rules to apply, and it's immediately you'll be able to find that. Okay? So, and I want you to count now how successful these rules are. Take a look at this. I'm just picking anything. Take a look here. And I want you to count with me. Right there, if I buy it over here, okay? If you buy it over here, you make money. So that's 1. You buy it over here, again, and it goes up, you make money, right? So let me ask you, all of you over here, I want you to make a trading decision. If it goes above here, who wants to buy here or who wants to sell? Just follow the rules, don't think. Follow the rules. Right there, where it says buy and it's above the neutral zone. Come on, you got 60 people in the room. Who's going? Yes, they are. That's how you make money, my friend. And that's, you see, guys, now everybody, well, Adrian, you're going to, unfortunately, it's up to you. You're going to be the one that pays us money. Okay, so the majority of you wants to buy. Again, we don't predict the future, Adrian, because we don't know. All what we do is following the rules. That's it. We're human beings. We can't predict the future. And therefore, that is your trade. And right there, you took it from 138 to 138.60. You just made some money. And let's do it again. Let's do it again. And remember, this is live chart. I'm not giving you PowerPoint presentation. So let's go to the next session right here. And let's do the same rule again. So if it gets above here, who wants to buy? And that right there, you took it from 138.20, you took another 400 points. Exactly. And now, trying traders, that is your previous high. Now it came back and tested. Now you're going to decide, is this a false breakout or should I pull back? Again, the way we do the software for us pinpoints the momentum highs and the breakout points. So right here, now you begin to make a decision. That pullback, should I take profits here or should I get out? And then you'll be able to identify the forced breakout from that. So, okay, right here it came below this lines here. What do you want to do, guys? Follow the rules right there. Steve, we're right here below the lines. What do you want to do here? Sell hook. Come on, guys, the rest of you. Come on, don't be scared. It's not a test. I'm teaching you how to trade. Training you. Good. Let's see what happens. You happy? Well, this is part of identifying. This is again the way we identify these zones is part of what the software does for us to make our life easy. But again, and let me finish with, so right now, if you're scared now, because we are, as human beings, we begin to fear the markets and we decide, should I sell it over here or shouldn't I sell it here? What we do is we turn on what we call the auto execution, and the auto execution, you can do it just to give you the signal, just to tell you now it's the buying point, now it's the selling point, just sell it. So we turn it off as we just turn it off when we put the 0 and the 1, we just turn it on and off. And take a look over here, what happens right there, what I have when you have a system that follows the rules, it becomes easy that you know exactly why it is giving you a buy signal and why it is giving you a sell signal. So it's going to give you a sell signal right there. Okay, John, give me 2 minutes. I want to, because the market is going to open in about 20 minutes, and I want to walk you through the answer to the 5 questions. So I'm going to answer all your questions in 1 second. Okay. So right now, guys, we have identified, and look at this. I want you to count how successful you are. Look at this. You buy it from here, you make money. You sell it from here, you make money. You sell it from here, you make money. And the key is now is to identify those key lines, or identify those zones, the neutral zones, and that's what. Look at this. And this is not just the euro; it's any pair that you want to be trading. Now, I want to ask you a question, training or trying traders, right there. All of you guys, quick question. Right here, what are we going to do? Absolutely. Now, all of us are going to buy. Thank you, guys. Now we're buying. Now it's beginning to move up. Now the second question is, remember, we have 5 questions. What to buy, how much to buy, when to buy, and when to get out. Right? Exactly. So right here, if you buy it at 137.20, and now it is trading at 137.60, and we're up 40 pips, should we take our profits? You want to take profits or you want to stay with it? Okay, Merle wants to go for it. What are the rules? Okay. Maybe half. Okay. Again, that is good. This is what you are all facing, all of you guys. Because again, and you're rightfully so, we try to come up with what we feel is the right answer. But again, as trying traders say, what are the rules? The rule is you have to stay with it to maximum. So what we have done, I want you to look at these candles over here. They are red and green. And that's what we're trying to do, to take away the subjectivity, to follow the rules. And when you take away your subjectivity, we're able to, again, to maximize and become consistent. So what used to happen with me on the floor when I used to be trading on the floor, and I tell my traders to buy it over here, the moment they see this red move down, they freak out. And they say, okay, it's coming down, let me take my profits. And when they take their profits from here to here, they are leaving all this money on the table. So they will buy it over here, And as soon as it comes down, they will take profits over here. And this is only profit that they will take, and they will leave all this money on the table. So what we have done, and it's part of the software and the way we trade, we put what we call, I'm going to put it for you here, what we call the wave. And what the wave does, it takes away the subjectivity and look what happens to these bars. They all change color. They all stay green, and as long as it's green, I'm staying with it. Look at this. So instead of taking profits here, I'm keeping all this, because this now the market is telling me, and there is momentum into the market. This thing is continuing. Will stay with the trade, and you don't take profits. Once it begins to change to red, this would be your profit taking point, and therefore instead of taking profit over here, you're going to take your profit right there, and that is from 137.20 to 138.20. That's another 100 pips. And that means you are going to have an additional, on one contract, an additional £1,000. So, based upon the rules, I gave you one rule, which we take the key lines. There are many rules that we have, 21 rules. And then we want to stay with the trade as long as I'm having momentum and I'm staying with the trade. And then I will take profits only, like here, for example, I will stay short. I can take profits over here. I can go short again over here. And I will stay with the trade, and then I can maximize my profit, and I can do that on the automatic. Okay? Now it's done on different market. Each market has its different, each session is different, Paul. Now, I will come in. Let's come and answer the first question of what to buy. What to buy, this is as important as, you can trade stops if you want to. I don't know, Rafa, it takes as long as it takes. As long as it's sitting in the neutral zone, you don't worry about it. So what you do, you have all these pairs, and this is how we do it. So we have, for example, what I call the FX alerts. So basically I have all my pairs. I put them in a chart like this, my 6 charts, and I'm waiting for every single one of them to break out of the range. I'm not going to say the euro now or the yen or whatever. I'm having 6 charts. Look at all of them here. And if you just take a look at this, immediately what pops about, you would have taken the pound dollar today from here, and you would have made this money. You would have gone short the dollar CAD from here. You would have taken the pound Swiss from there. Just looking at this, you would have immediate. I'm just opening this because Trying Trader was asking a question. You got, look how many winning trades just today. 1, 1, 2, 3, 4, 5, and you got 1 losing trade. So you got 5 winning trades and 1 losing trade. What does that mean? What does that mean? If you take 6 trades, 5 of them are winners and 1 of them was losers. This means that you have a system that is working, it's money in the bank, Steve, and it means that, exactly, and it means that you have a system or a methodology or a set of rules that work 80% of the time? Can you make money with having something that works 80% of the time? No indicators, no voodoo stuff, no this Elliott wave projection is going there or this whatever, nothing. You're just looking, following a specific set of rules. It's simple, logic, and it pays. If you can follow these simple rules, this is how you can live. It is full moon long, exactly. Now, this is the half of the equation. There is also one other part of the equation that we need to answer. And that is this. I'm in a meeting. You take a look at this chart. And you want to be looking, let's say, at the 138.36. And let me remove these lines from here. And it's sitting there, and I don't know. That's part of what we train you. If you, this is how the software does. That's part of the. It's a combination of a couple of things: the number of trades that goes out in the first 20 minutes or so from the session, plus the volume of the trades. So we combine those together, and we come up with the. And it's part of what the software does it for you. But I mean, I can show you. We teach you that on the course if you want, whatever you like. So now you want to decide here, the 137.93, is this a buy or is this a sell? Because now you're looking at a bigger time frame, you're not looking at the daily chart. So yes, trying says buy, but if I do my homework and analyze my charts, and doing your homework is the most important thing you can do. Okay? You need to say, when I tell you that there is the euro is trading at 137.94, should I be a buyer or a seller? The answer to that has to be, you have to reach that answer from your planning of your trade. And I can tell you right now, when I show you, when I move from this chart to what we call our radar screen, which we plan our trades, if the euro is below 138.36, and let me pull up the chart again and you see the lines. I put a different chart and I didn't save it so that it will come back again. If it's below the 138, no, we don't use any fib, George. We don't use fibs. We don't use, all these are tools made for reception. If anybody can give you a quantifiable number, whether it's a percentage of the fib or whether it is a percentage of moving average or whatever, then another guy can program it and he can take advantage of it. Okay? So if you look here at the radar screen, this is our radar screen. This is where we do our trade plans every week. Every Saturday at 2 o'clock London time, we do our trade plan and we identify what we call the decision-making points. Okay, these are decision-making points. And when it says long point, this means that if the price go above this long point, we are going to buy. If the price comes below this short point, we're going to sell. And we have what we call a structure long. This is what we call a trend changing point. If it goes above the structure point or the trend changing point, we're going to be a buyer. So having said that, the euro now is trading at 137.97, right? If I look to my left, remember the number I told you on the chart is the 138.36. Since it's below 138.36, I'm actually should be looking to sell the euro. I will only buy the euro if it gets above now the 138.36. If you look at, let's take the pound. Look at our buying point. What's the buying point here? 158.50, right? So this means this morning when it got above the 158.50, we should be long, and now it is trading 158.90. So you're up based upon that homework that we did last week, last Friday. You're up now 40 points. And if you go to our planning session here, there is your 158.40 right there. This is the 150. Look at this, 158.40. That's your buy and that's your profit. So planning your trade is fundamental. It is imperative. I for the last 35 years, every Sunday that I am working, unless I am on a vacation, I am doing my planning session. And I come to my radar screen and I populate my radar screen. And you can see if it's green like this, this means we are above it, you're making money. So you bought it. If it's red, this means it's below it, you sold it. And I want you to count how many of those is making money and how of those are losing money. Let's take the euro yen. We short the euro yen from 107. It is now 105. You're up 200. Yes, if it's between the long point and the short point, you do nothing. You find something else around me that's going to make you money. Remember, choosing what to buy is as important as what to buy. If it's not moving, you don't want it. And so look at this, the euro Swiss, you're short from 123. Every single trade from what we did last week in the trade planning session, on average, you're up between 2 to 400 pips per trade. And that is not because this is a magic system. No. Everything is done by hand. We have no rules. We follow rules. Like I've explained to you how we do it in the morning. This is how we do it, by rules. No magic, no voodoo, no algorithms, or no, not that my system is the best thing since sliced bread. No. All what the software does, it makes your life easy. It does the work faster for you, and it does it more precise, and it takes away the emotion. But you and that software, you become a deadly combination. Both of you become a powerhouse because you know what the software does. Okay, I will explain it, Michael, in a second. So right now, so the way, again, let's go to answer the first question of what to buy. What to buy and when to buy. This is what you have to do every week. You have to have a spreadsheet like this or a quote page like this, and your numbers exactly are precise when you're going to buy. What that will do, Arami, for you is it will make your stop very small, and you're taking the high probability trade and you are not losing a lot. So you are now above. So let's take the pound, for example, above the 158.50. This means above that point, you can only buy or do nothing. Short is not an option. So you buy it at 159, you're 50-50, you're looking for the move to the upside, and now it is trading at 159, so you're up already 50 points. In half an hour, you made your $500 for the day. Thank you very much. Go and play golf. The same thing with take a look at anything that you want. The Aussie yen. It's basically right now it's sitting at it, so you're turning flat. You see it begins to change color, so now you're stop down. Absolutely. Okay? And that again comes to the part of your selection, of your portfolio selection, choosing what to buy. The euro dollar, let's see what the euro dollar is doing. Well, the euro dollar has passed the euro dollar has passed now. It is coming to the momentum high. So right now, what you need to be doing, you need to be buying the euro dollar, and it's going towards the 138.36. So right now it is trading at 138.17. So it's 20 points away from my entry point. So I don't need to rush. I'm ready to buy it, and I'm buying it somewhere. Look at this, the 138.17 on the radar screen, 138.36. So within a 20 pip range, I'm going to wait and going to take the buy when New York opens. See how easy it is? That there is no ambiguity, there is no opinions. I'm not, okay? We're making the trades based upon the rules. So, and what it is simple. It is what I'm going to do, guys. It is these 5 questions. You answer them, and it is easy to answer, but it takes a great deal of work in order to get to that quick answer. So, what to buy? I'm going to buy the euro or the pound. What that happens is the radar screen. When we do our planning every Saturday, we know what we're going to buy for the next session. And then during the day, I am looking at my radar screen. Look at this. I'm looking at I'm going to trade New York with you in a minute. I'm going to show you how we use the radar screen. Right now, if it gets above, I'm looking at, okay, now suddenly the euro pound just turned green. It's 86.10. I'm already up on the trade. Even though the euro pound is coming down, I'm still up 25 pips on the trade. I will buy the euro. Look at this here, 138.36. That is, if it gets above 138.36, that's going to be my buying point. Okay? So what I'm going to do before, I don't know what time is it, Travis, Matt, are you there? What I'm going to do, guys, I'm going to, before I get into the trading session, I want you guys to actually learn the process of answering the 5 questions and do it yourself. But I want the ones that are serious in doing this. We have been talking with FX Street, and we have started doing some work to train the FX Street subscribers and users. So what we're going to do, I'm going to put for you now the link that we have on FX Street. Wait until when Matt comes in. Travis, where are you? Okay, thank you, guys. All right, so just put them the link. So what we're going to do, guys, is if you just go there, we're going to give you 2. Basically, if you buy one of them, which is like $18, we're going to give you 2 of them. Anybody that's on FX Street, we're going to take an additional 2 for them as a gift. Okay? And you come in on Saturday, and you are going to have this recorded, and we do the plannings together, and you can start using the trades the next week. All the turtles are doing fantastic. I'm extremely proud of them, to be honest with you. They are much better than my wildest dream. So anyway, Matt is going to put for you the link. Okay? No, just put the link, Max. Well, hopefully the turtles is going to be next year. I mean, we're just finishing this year. We've just begun. We started trading now for the last 45 days. So hopefully when the experiment is done, then hopefully next year. But everybody is welcome. You can. Anyway, so now the question that somebody was asking, Mike, is the yellow moving average on your chart VWAP? What's VWAP? No, it's not VWAP. This yellow line? This yellow line? No. What's this yellow line? Moving average? No, we don't use that. It just seems to be. VWAP doesn't work on FX, dollar, Aussie, whatever it is, because part of the VWAP is volume. Yes. So you need volume in order to take that volume and weight it. And in FX, you don't have volume, or you basically don't know the volume, so it's not particularly a component. But you can, if you can overlay it on your computer, it does help. The VWAP does help. But there is also the VWAP and the TWAP if you want, or you can use a combination of the VWAP and the TWAP. Again, I don't particularly prefer any indicators, guys, because if I'm using an indicator, I'm giving somebody the edge over. So if somebody has an advantage over me, then the game is not it's not fair game. If somebody knows where am I going to buy and where am I going to sell, then I have no edge on that trade. Okay, so now it's getting to 8 o'clock. The market is opening, and as you see now, I'm going to show you how we trade. Suddenly, all what we have, the signal now, it goes blank. No, you're absolutely, that's a very good question, Sting. What we're doing now is we're waiting now. When you see all those signals go out, now it is setting up and it's cleaning for us, and now it's beginning to identify for us the new neutral zone. So I know that it is ballpark, the 138.36. So that is part of the equation. It is now 38.15, so I am pretty close to my buy. I will only buy it above the 138.36. And now I have, right now, if you see nothing like this, Sting, this means that it is in the neutral zone now. See that? As soon as it gets above that neutral zone, this means it will be above also the 138.36. I will have a signal like this that says long buy. And that will be the moment that I will stop in and buy. Did you follow me? So the first component is above the 138.36. So I'm going to come here, and you see it's coming now to 138.20. So I'm ready, and here is my neutral zone. So if it's black like this, it's empty like this, then it is in the neutral zone. But now you're ready to buy. As soon as it breaks above this, and I get a signal here, if it gives me a long buy over here, that means what? It means that it has broken out of the neutral zone, and it is also above the 138.36. So how many buy signals you have? You have two. That simple, that easy. And the same thing with all the other pairs. So we come now at, it's 1 o'clock, or we come to our notices, if you will, and now we begin to choose the pairs we're going to trade. So the first pair we're going to trade, I don't need the pound CAD, so now I'm going to change that to the euro dollar, because I know I'm buying above the 138.36. Okay. and right there is 138.18. I can put a price alert here, like this, 138.36, and I'm going to place the alert on it. So as soon as it gets above the 138.36, it's going to give me a signal, so I don't need to waste my time trying the link is not available. I will get it for you. Okay? So, guys, anybody that wants to take the train planning session, again, the 2 weeks for free, just send me an email over there. I'm going to give it, or click it on this, we'll give it. And you'll get it for free. You can have the 3 weeks. Anyway, so the question is, do you have rules on the amount of... Yes, absolutely. We have rules on the risk. And the rule is, the beauty of the range, is that is your risk. That range, what it does, gives you also your risk. So just click there and you get 2 weeks for free. And so just click on this. These ranges is your risk. So yesterday when we're trading Tokyo, that was my stop. In London, my stop was a little bit bigger. This morning, yesterday, my stop here was much bigger, depending on the volatility of the market. And while the opening range is being set and is being calculated, now you see here, this is, if you look here at the radar screen, now that is so far the size of the range. And that means that is your stop, or your probable stop in the market. So for the dollar yen, so far, we're not finished with the range, but so far, yes, we record it, and then after that you can see it on the website. Yes, you have it for all week. So if you can't attend at 2 o'clock, you can see it in the afternoon, and you must, we record it because you must have on your spreadsheet the same entry. So it's important that you do your homework. We do it Saturday so that you can put the lines on your chart by your hand. So and you make sure that you have your alerts. So going back to my stop, all these guys now, these are our stops so far. Yes, one second, guys, please. Okay, guys, I'm sorry. So right now, okay, it will fix it for you. This now is my stop. So in the pound Swiss, my stop is 34 pips. If your stop on the euro pound, it is 7 pips. And this allows you, this allows you to choose which one you want to trade. The one with the big stop, this is a high risk. You might say, I'm going to do something else. Okay? So right now, while the ranges are being formed, I can begin to identify my stop. So my stop in the euro dollar so far is about 18 pips. So, and it's sitting at 138.13, and my stop is 18 pips, so it's about 20 pips, then I can take that trade. Let's see what else we can buy. I want to take something that's beginning to come close to my buy signal. So I have the EuroCAD that's already passed. We're already up 400 points on that. So let's take the pound. The pound, the buy signal was this morning at 158.50. It is now trading at 159, so it's only 50 points above my buying point. That's good. So I go to my page, my trading page, and that's the pound. So now I have the euro dollar. I have the pound. I also want to see the yen pairs. Look at the yen. The yen is falling. So I can put also, if the yen is, the pound yen is going up, so I can put the euro yen. Okay. And I can also, if you see this, if you look at the pound yen going up, the euro yen is going up, so I can also try, how about the Aussie yen? Look at this. So now I have the Aussie yen going up, I have the pound yen going up, I have the euro yen going up, and now I have the dollar going up, and now I have the euro dollar. So now I have my 6 pairs. I begin to answer the what to buy. So these are my 6 candidates. Now I go back to my radar screen and find my stops. What is the size of my stops? So the dollar yen, my size for the stops so far is, again, you can approximate those, add a little bit on. So it's about 10 pips, 6 pips. The dollar Swiss, I have 11 pips on the trade. The pound Swiss, the range is big. So I might decide I'm not going to take the pound Swiss because the stop is going to be big. The Aussie CAD is good. Oh, look at this. All these are, and when you have a fraction like this, a percentage, okay, this means that these are the ones that have a below average stop. So the Aussie Swiss, my stop is about 60% of the average. So if my average is 20 pips, now I can have, let's say, half of that. That's my average stop. Okay, and that is part of our selection of what to buy. And the radar screen shows us what to buy. So now, as I said, we made our choices. We're going to wait until the ranges are set, and that will be our candidates to buy. I'm going to turn the strategy on. And you can decide, for example, if you don't want to take the buy, you only want it to go short, you can decide you want to sell short. Anything that you want to be doing, you can always set that up the way you want to set it. And you can take the trade. So right now, it's coming down, the euro dollar is coming down, so we don't need to rush to buy it. Because again, I think who was asking, if it gets above the 138.36, then that is going to be our buying. So now we are going to open our radar screen, and we're going to wait until I get anything out of here, if I get a buy signal or anything. So as long as there is blank over here, this means that they're all in the neutral zone. And now I'm going to go to my trading platform, and these are all the pairs that I'm looking to trade in today, and I'm going to wait until the ranges are set, and I'm going to make a decision to buy. And you can see now the ranges are being populated. But still, you've got this big move in the Aussie to the upside, the big move in the pound dollar to the upside, the big move in the pound yen. So this means that we are going to look at, thank you, George. We're going to look at the continuation in this. And one of the things I want to share with you until the ranges are set, if you look at the yen index, okay, and this is one of the tools that we follow on Saturday in the trade planning session. We look at the indices, because the indices is the basket of those currencies against the rest of them. So if you look at the dollar, I'm sorry, at the yen, I want to show you the yen. The yen is now in a fascinating, hold on a second, I want to show, okay, let's go to the Swiss yen. Yes, you can take the Swiss yen, absolutely, but the Swiss is being tempered now. Let's see, because of they pegged it to the euro. You can see the Swiss yen. I mean, look at the Swiss. I mean, the Swiss is practically in a bear market, but still the Swiss yen is going up. You can. But the choice here, trying is, it's you want to buy the strongest and sell the weakest. So both of them are weak. Okay, sure. Okay, guys. So anyway, I think it's about time to go because somebody. I want to thank FX Street, and I want to thank you all for joining me today. And as I said, you are all welcome to join us in the trade planning session. You can get 2 of them absolutely for free, and we're giving this only to the FX Street students because we want you all to succeed. We want you to get into the process of learning how to plan your trades, following it, and then we trade and execute with each other the following week. Okay, guys, so thank you very much, Maud. Thank you all, FX Street, and thank you all for joining us today. I'm very happy to see you, and I hope to see you next month. Okay? Thank you, guys.